Hello again. Today I'm gonna share my trading notes on specific key point that I use on top of the list of the rules on my trading strategy, which is risk management. There are a lot of good trading strategy out there. You can get it from the internet or any books, but based on my experience, good trading strategy always ruined by bad risk management, always. So first of all, this is the example of my trades taken last week. Please focus on the lot size that I use on my trades. As you can see, after my deposit, I only use 0.01 lot from my trades, and then I increase my lot size according to my account growth and my base lot. Yes, base lot. What is base lot? Okay, let's start. The first element of my risk management rule is base lot, which is the maximum total running lots to trade in one specific time. For example, if my equity is $100 and my risk appetite is 2%, so my base lot should be equity times risk divided by 100. That means 0.02 lots. So based on my equity and my risk appetite above, I have 0.02 lots. I can have at maximum one running trade with 0.02 lot or two running trades with 0.01 lot each. Nothing more. To open another trade, I must wait until any of my running trade close, whether in loss or in profit. So at the end, my running trade always according to my base lot. Another example, if my equity is $100 and I'm a high risk trader and my risk appetite is 5%, so my base lot should be 0.05 lots, and I can have at maximum one running trade with 0.05 lots or 5 running trades with 0.01 lot each. So I always obey my base lot, and base lot can be increased along with the balance growth. That's why as I showed you previously, when I started, my base lot was 0.03. My risk appetite was 3%. So I take at maximum 0.01 lot for 3 running trades. Then I increase it along with my account growth. As you can see, at the end of the week, I started to use 0.05 lots based on my new base lot. Let me show you again my obey your own base lot based on your equity and your risk appetite. Discipline is always needed. Okay. The second element of my risk management rule is risk and reward ratio. Limit your risk, set your stop loss. Never ever let your running trades without stop loss. Always set your profit target bigger than your stop loss. And your minimum risk reward ratio should be nothing less than 1 compared to 1.5. That means if your stop loss 20 pips, then your profit target at least 30 pips. That way I only need to win 5 trades out of 10 trades and still be a profitable trader. Always limit my maximum loss in one trade, nothing more than 3 until 5% of my equity. For example, if my equity $100, then my maximum loss should be between $3 until $5 per trade. That way I can only get margin call when I fail more than 20 trades in a row, and that should be impossible, losing 20 trades in a row. Otherwise I shouldn't be trading at all. So second element is risk and reward ratio that matters. The third element of my risk management rule is to set achievable target. We don't need to trade on daily basis every day. Just set an achievable weekly or monthly profit target. For example, if my starting balance $100 and I have weekly target of 5%, that means $5 a week. Only $5 a week. So my monthly target will be 20% growth. Yes, that is achievable for me. So a week has 5 trading days, and I used to trade only from Tuesday to Friday. I have another thing to do in Monday. So if in a trading day I make bigger than $1.5, I have choices to close my trade and close MetaTrader and maybe watching TV or doing anything else. Just avoid opening my trading chart. So in 1 week I can do anything else other than trading, but still manage to achieve my weekly target, which is $5 a week. Yes, maybe that is small, but 20% account growth is a better investment rather than to put your money in your bank saving account. And I can still doing my other job. So that's That's the basic 3 element of my number 1 rule of any trading strategy I use. Base lot, risk and reward ratio, and achievable target. That's all. I hope you enjoy. Thanks for watching.